Here's exactly 5 best ETFs that can make you insanely rich before retirement. Investing in ETFs can be so complicated and so confusing, especially because there are literally hundreds if not thousands of ETFs to choose from. Now, if you are somebody who is just newer to investing in ETFs, or you are an older investor who is about to retire off your ETF portfolio and planning on to live off the dividends or even your ETF portfolio as well, then these 5 ETFs are some of the best ETFs to invest in if you are a younger investor, older investor, and especially if you are nearing retirement or want to have the most amount of money in retirement as well to have a stress-free and even a healthy retirement time when you retire. These specific 5 ETFs can get you as rich as fast as possible, but also as safely as possible. Some of these ETFs have diversification and some of the best companies in the entire world all in one fund. You'll even receive passive income in the form of dividends to potentially live off of dividends in the future. And of course, these ETFs take advantage of the best returns in the stock market. Even if there is a recession or a stock market crash, you'll always be in the green over time. So if all that sounds good to you, let's get started. The first ETF is going to be a gold ETF. Now, gold is a great investment. It can be a great diversifier in your portfolio as well as provide great long-term growth potential. Gold is considered a safe haven investment. Reason why is because it is a hedge in terms of market fears and just political and just financial uncertainty in the stock market. So yes, a commodity like gold is the safest asset for investors during times of market turmoil, uncertainty, volatility, and even fears of a recession. And then when stocks fall, investors often buy gold and flock to gold for safety. Financial advisors often recommend their clients to have a small portion of gold for diversification and the long-term benefits of this amazing commodity. And of course, it's a great hedge against market fears and just market uncertainty. Even over the last year, when stocks have been falling, gold has been only going up and crushing equities by outperforming stocks by a very wide margin. Gold is not only a store of value, but it has a history of appreciating in value as well, making gold a great investment for beginner level investors and even just experienced level investors who want this great diversification benefit of a great commodity like gold in their portfolio for diversification and just great growth potential and just protection in case the market falls. Gold will likely go up, and that's why people love gold. Now, if you are near retirement and you have only stocks or only bonds, gold is great because if stocks fall, usually gold will go up, so your portfolio will still have some rising value and growth, which is great for people who are near or even in retirement as well. Now, I know what you're thinking. Why is gold a great benefit for diversification? Well, the answer is that gold is not related and not correlated to stocks and even bonds on average. You're basically hedging your portfolio against uncertainty, where you can not only preserve but even grow your capital as well with gold in a very liquid manner with an ETF. My favorite gold ETF is IAUM by iShares, followed by BAR and FGDL. I also want to say that with investing in gold, you can also protect your money against inflation, which is a great benefit because gold usually outperforms inflation, and it's great for people who are near retirement who want to outperform inflation. And yes, gold does just that. The expense ratio is the lowest we've seen for a gold ETF of exactly just 0.09%. The returns of this gold ETF have been just absolutely amazing, where this ETF has given investors over 40% returns. Yes, over 40% returns in the last year. But in general, it's done over 16% returns annually over the last 3 years. Before we move on to our next ETF, I want to talk about one company that investors should put on their radar or watch list if you are a lover of gold. That company is US Gold Corp, ticker symbol USAU, and it's listed on the NASDAQ exchange. USAU is a small cap gold exploration company that holds a competitive advantage with its focus on world-class gold projects in mining-friendly US jurisdictions. US Gold Corp is an emerging gold, copper exploration and development company positioned to benefit from the rising and ongoing bull market in gold. With a focus on shovel-ready projects and a strategic location in a mining-friendly jurisdiction, US Gold Corp aims to capitalize on rising prices of gold. How this company makes revenue? Well, that's a good question. The company generates revenues primarily through the development of its mineral assets, particularly the CK Gold project in Wyoming. This project is one of the few permitted and shovel-ready gold and copper endeavors in North America, which is pretty cool. And with this streamlined path to production, US Gold Corp plans to leverage its gold and copper reserves to maximize profit margins for investors. With rising gold prices and stable energy costs, the company stands to benefit significantly as market conditions favor gold mining operations. USAU, or US Gold Corp, has a price target for investors of exactly $16.50 by Paradigm Capital. On Seeking Alpha, which is my preferred research software that I use every single day for ETFs, I'm going to use it for this stock of USAU, US Gold Corp. And Seeking Alpha gives this stock a B+ for its growth grade, a A+ momentum grade, and an A grade for its revisions. US Gold Corp is up over 100% in the last 5 years, over 140% over the last 1 year, and even up over 70% just this year. In summary, US Gold Corp has quite a few things going for this one stock, like being on the Nasdaq, a high price target from its current trading price, acclaimed investors, good liquidity, world-class projects, and even a bullish sentiment by investors on gold. Of course, yes, before you make any investment, make sure it fits your own risk tolerance, your own time horizon, your own goals and needs, especially your own risk tolerance. Small cap stocks like this one can be very volatile and very risky, so keep that in mind. Do your own research and do your own due diligence. And let's move on to our next ETF in this video. The second ETF on this list is going to be an S&P 500 ETF. You should know, and I should know, that this index of the S&P 500 is a great index and a great investment for any investor in the stock market. Now, you might be wondering, why is the S&P 500 a great investment? Good question, and I'll answer that right now. First of all, you have diversification to literally 500 of the largest companies in the entire US economy. You literally have a huge basket of so many stocks all in one fund, and consistent, stable, and just great returns that have outpaced inflation, which is a great benefit as well. My favorite S&P 500 ETF is going to be SPLG for newer and even older investors who might want a lower expense ratio and just a lower share price as well, followed by VOO and even IVV. SPLG by State Street invests in literally 500 of the largest companies in the USA that best represent the US economy. SPLG has legit every sector of the stock market for ultimate diversification. The top sectors are technology, followed by financials, healthcare, and then consumer discretionary. With SPLG, you invest in some of the top stocks in the entire world, like Microsoft, Apple, Nvidia, Amazon, Meta, and Google. The dividend yield is around 1.3% and also has the lowest expense ratio for the S&P 500 index of exactly 0.02%. The returns from SPLG have been absolutely amazing, of around 18% annually over the last 5 years and even over 12% annually over the last decade. Now, SPLG is a great fund. Now, I want to say that I also invest in what SPLG invests in, which is literally 500 of the largest companies in the USA in a portfolio or a ETF called VOO, and it's my top holding in my portfolio, and I love it so much, and you should too, hopefully as well. The third ETF is going to be a total world ETF for the absolute most diversification in your portfolio. Why I love a total world ETF is because you literally own everything, the entire world, all in one click of a button in one ETF, and it's a great way to diversify in your portfolio for the most investments all in one ETF. Yes, you literally invest in everything. You invest in large caps, mid caps, small caps, even international stocks for ultimate diversification in your portfolio. You invest in legit everything. Now, you just don't have hundreds, but you literally have thousands. Yes, thousands of stocks all in this one fund, and you literally have not just only one sector or two sectors. You have every sector, everything in this one ETF, and it's great for investors who want to sleep better at night because you are the most diversified than any other investor in your portfolio. My absolute favorite total world ETF is going to be VT by Vanguard. VT's top holdings are high quality large cap names like Apple, Microsoft, Nvidia, Amazon, Meta, and even Google. As you can see, VT holds emerging markets and even other regions for diversification benefits, and of course you invest in so many countries all in one ETF of Vanguard's VT. The dividend yield is solid and great at exactly 1.9%, and it also has a low expense ratio of exactly just 0.06% as well. The returns from VT have been great even with international exposure, which is not the best, but hey, it's been doing great. A total world ETF like VT has returned over 13% annually over the last 5 years and even over 8% annually over the last decade. The fourth ETF is going to be a covered call ETF for monthly dividend income. Why I love a covered call fund like a covered call ETF is because you could literally get paid monthly income, yes, monthly dividends every single month, but also you get good capital appreciation as well in the long term with that monthly income, which is great for people who want dividends or to live off of dividends in their retirement goals or dreams. You should know that if you want to invest in a covered call ETF, that it's only for investors who want more dividend income or more monthly income and maybe less upside potential, which is okay because you get paid good income every single month to pay off expenses and to potentially live off of dividends faster than if you were to invest in lower dividend yielding funds. My absolute favorite covered call ETF is going to be QQQI or QQQI by NEOS, followed by SPY and then GPIX. And this ETF is a NASDAQ 100 high income ETF. What's amazing about this fund is the fact that it provides high monthly income to investors who want so much high juicy sweet dividends by selling covered calls on the stocks in the fund. This fund also offers lower correlation to the overall stock market. The third benefit is also tax efficiency, as this ETF utilizes index options, which are classified as Section 1256 contracts and are subject to lower tax rates than other covered call funds. QQQI invests in 100 different holdings, where its top holdings are Microsoft, Apple, Nvidia, Amazon, and even Broadcom. You also get exposure to many different sectors of the stock market from the famous NASDAQ 100 index for some solid diversification. The dividend yield for this ETF is around 14 to 15%, yes, 14 to 15%, all in this one fund for a double-digit dividend yield. The expense ratio is 0.68% as well. This ETF is a newer fund, but a proven strategy, which is the reason why it's on this list, because it's a proven strategy. This strategy not only gives investors not only double-digit dividend income, but also double-digit returns since inception and even over the last year as well. Our last ETF is a sleeper, and that's SPHD Invesco's S&P 500 High Dividend Low Volatility ETF. Yes, I know, SCHD, VYM, DGRO, FDVV, HDV, and any of those traditional dividend funds can also replace SPHD on this list. The reason why I included SPHD is because this fund looks for stocks that have high dividends and low volatility from the famous S&P 500 index, which is why I included it in this list, because it is for investors who have a lower risk tolerance for high dividends and even lower volatility, which is a great combo. SPHD invests in, you guessed it, high dividend and low volatility stocks, roughly 50 of them from the famous S&P 500 index in one ETF, which is great for investors who are looking for dividends, as well as low volatility, low risk investors as well. SPHD invests in quite a few sectors that pay higher dividends and have a low volatility, like real estate being its top sector, followed by utilities, consumer staples, energy, and then healthcare. Its top holdings are dividend kings like Crown Castle, Altria Group, Verizon, Vici Properties, Realty Income, and AT&T. SPHD's current dividend yield is around 3.4%, where fun fact is that this fund or this ETF pays monthly dividends, yes, monthly dividends. Unlike SCHD, VYM, DGRO, FDVV, all those funds, this ETF, SPHD, not only pays a dividend, but it does it monthly, which is a great added bonus for this fund. Of course, the expense ratio is exactly 0.3% as well. The returns and even performance of this fund have been consistent and stable and also quite predictable, giving investors over 12% annual returns over the last 5 years and even over 8% returns annually over the last decade. Now, if you guys like this video, please give it a like because this cute puppy did. Now, if you want to see me rank exactly 55 best ETFs, you can check it out in this video. I love you guys so much. Crushing the stock market. And take it easy. Peace.